Let's get random but interesting on exactly what we just talked about. That is Europe's energy crisis, Russia tightening the screws on Germany once again. But what we really don't know is how much of an impact a major gas or energy shortage might have on Germany and the rest of Europe. There are a lot of estimates that are floating around out there. And here is one that just came out from the International Monetary Fund, the IMF. And though their recent report is long and wonky, data firm Statista did some helpful work in dragging out some of the numbers. And here is what they found. If Russia were to fully turn off gas flows, they're not. They're dialing it back to 20%. But if they cut it fully off like they did last week for maintenance, it would slam a number of economies across Europe. They estimate that a year after a gas shutoff, the entire EU economy would lose nearly 3%. I know that doesn't sound like a lot until you realize the combined EU economy is about $18 trillion, the same size as China, not much smaller than the United States. So what companies would get the biggest hit? Well, Hungary would take the single biggest hit, according to IMF and Statista, although it is likely to make a separate deal with Russia. Italy is the second most exposed economy. They are heavily reliant on both oil and gas from Russia. In fact, Italy's biggest refinery is in Sicily, and it is owned by the Russians. Germany, of course, is the biggest worry. It is the largest economy in Europe, about 1/4 of all output, and the IMF and Statista estimate that it could lose nearly 3% of its economy. Now, I'm sure you can find many smart people who think that estimate is way too small. I know we've been kind of beating a horse here. As we have said many times, energy is not part of an economy. It is the economy. In many ways, economies are just taking energy and converting it to some other productive use. And let's be clear, this is not just a Europe issue. Europe, not only a huge manufacturer of mostly higher value goods, it is also a big buyer of the stuff that American companies produce. And any slowdown across Europe will hit earnings here and maybe the stock prices of American companies. Oh, by the way, it could also send the euro down even more against the dollar. And that, as we just heard from Microsoft and Google and their earnings overnight, is another bad thing for corporate earnings. Bottom line, it's random but interesting, but it's also important. And for you to make sure that you know now which stocks that you may own that have a lot of exposure to Europe and its economy. Timestamp it and thank us later.